Julia, something good happening here.
Yeah, that's right. Applovin beating on the top and bottom line. EPS of $1.73 ahead of estimates of $1.24. Revenues of $1.37 billion ahead of estimates of $1.26 billion. You see shares are now up 16%. The company's first quarter guidance also ahead of expectations. The company guiding to first quarter revenues in a range of $1.36 to $1.39 billion, ahead of estimates of $1.32 billion, and adjusted EBITDA in the quarter for the fourth quarter also well ahead of expectations, $848 million versus $762 million. Shares now up about 15.5%. Back over to you.
Wow, Julia, thanks. Okay, Barb, now we've got a little bit more meat to talk about here. Applovin and the trade desk, not exactly in the same business, but not as different as some people might think. Applovin, think about app stores, think about data optimization of apps and being able to monetize them. The trade desk is supposed to be making money off of advertising. We don't yet know. Of course, we have to listen to the calls from these companies, what's going on beneath the surface. But there's something perhaps here in the story of data in apps and monetization beyond raw advertising.
Yeah, well, Applovin, they do have very different business models. I mean, Applovin is very early on their e-commerce scale and also trying to go into other verticals, which will be an interesting update on the call. And that again, I think is very different. Why you see the upside there. On the other one, it's programmatic advertising, and so it's very different trying to hook up buyers and sellers, to just buy ads without having to do it manually. So it's almost an automated process. So it'll be interesting to see what's going on there because they are the leaders in that space. It doesn't sound like it's competitive inroads, but that one is going to be interesting to hear about. But Applovin is actually, they make their money both on fees charging for their software, for the mobile advertising, and also when people sell or buy something on their app, on their mobile games, they get paid there. So they're very different business models. And again, Applovin is still, despite it being the #1 performer last year, up some 615%, they still have a lot of room to grow. So what's interesting is, again, when they reported, and they were expected also to do a beat and raise, would the stock go down? Would it be enough or not? But I think it's clearly telling us that investors think there's a much longer runway for growth, despite the massive appreciation. And it's expensive on the current PE, but it means earnings are likely to come.